everybody has a network of
Yeah.
some kind. It begins with one person. It doesn't have to be 100 people. It begins with one, and that one knows somebody, and then the next one knows somebody. It's almost like multi-level marketing.
Welcome back to the channel, everybody. Today we're going to talk about how to raise money from wealthy investors. And man, I've got a great guest for you. I've got Joel Friedland. Joel has done this a long time ago and been continuing to do it over the years. He's built a great business back in Chicago. Joel, thank you for coming on the show today.
Hi, Joe. It's great to see you.
Why don't you tell us a little bit about how you got started?
Sure. Um, Years ago, when I was 22 years old, now I'm 64,
Okay.
I went to work right out of college for a family. Their name was Podolsky, and they were one of the biggest industrial real estate owners in the Chicago area. It was a father named Milt Podolsky, his brilliant son Steve, and his son Randy, and his daughter Bonnie. And they had 84 industrial buildings, and they hired me as a leasing agent. It was
Okay.
1981. Interest rates were 17%. They had 10 vacancies, and they were struggling with those vacancies. They couldn't get people to move. It was one of those situations where companies were scared if they moved and spent the money on a relocation, they'd go out of business. That's how tight it was. So I went door to door canvassing, called cold calling, in industrial parks to fill up their vacancies.
Yeah.
And in the first year, I got them all filled up except for one. So I got 9 deals done, literally door to door canvassing to find tenants by asking industrial company owners if they would consider moving down the street. And it worked. It still works. It always works. So over the years, I put together about 100 acquisitions, all industrial buildings,
Okay.
and raised a couple $100 million from a group of, say, 250 investors. Everybody in that group is wealthy.
Okay.
People don't invest 50 or 100 or 250,000 as a minimum unless they have enough money that's a small percentage. I believe that no one should invest any more than 3% of their total net worth in any single deal, because diversification is really important. And I think that it's gambling to put more in. I had a guy call me this morning who's one of my investors, and his personal net worth, I know he told me, is right in the $5 million range. And he said he found a property he wanted to buy by himself for $1.2 million. And I said, you can do that, but I think that's a lot. I think that's a
Yeah.
real lot. How much equity? He says, all equity. I said, so you're going to take $1.2 million of your $5 million net worth and put it in one deal, 25%?
Yeah.
His wife was on the phone with him, and I said, Allison, John, don't do it. Are you guys morons? She said, I've been telling him that, Joel. I mean, that's why we called you.
Boy, did you cause a fight in that household.
Well, John said, you know what? I've been leaning toward not doing it. The
Right.
deal's kind of risky. The build out that I found out I have to do is more expensive than I thought. So what happens for me in terms of my investors and my relationship is I become more of an advisor to them because I've got 43 years of real estate experience. And when you advise somebody and you give them your best, when it's time for a deal where I have to raise money to go buy something, I have people who trust me and who I've done something nice for, and who believe that what I say makes sense,
Right.
and then I can raise money from them.
Yeah, you've built trust with him. Now, but that's where you're at now. How did you get your first? I mean, obviously you got your the guy you were working with, you got them to sign up with you. How did you get your second investor? Did you attract them, or did you have to actually go out and start beating the bushes and cold calling, say, hey, I've got this properties I'm partnered with your mentor, and how'd you get started?
So I was a broker,
Mhm.
and I had made all these industrial real estate deals, both representing tenants and landlords. And I took a look at who were the tenants that I represented that knew that I was conscientious, that I could be trusted. So the first call I made was to a guy by the name of Morris Brown. And Morris owned a bottle company with his family, and I had helped them with an industrial real estate purchase.
Okay.
And I called Morris, and I said, I need to come see you. And he said, what about? I said, I'm becoming a syndicator. I'm buying a building, and I'd like you to invest. He said, come on over. So he was in his 70s. I went to his office. He was sitting in a chair like this one, an old fashioned looking chair,
Yeah.
smoking a cigar. Kind of looked like Groucho Marx,
Oh my God.
except not quite as funny.
Yeah.
And I said, Morris, I'm raising money in chunks of $20,000 each to go to a $560,000 deal. And he said, Joel, when I was younger, this older guy helped me. I'm going to give you the 20 grand. And if the deal blows up and I lose my money, I won't be upset. I think he could have written a check for 2 million instead of 20.
Probably. Yeah.
I think for him, it was like rolling off a log. So I got my first check,
Okay.
then called the next guy. It
Yeah.
was, and that's what happened. I called my clients. I called someone who manufactures batteries. And
Gotcha.
I said, Jim, I need to come see you. He said, what about? I said, I'm putting together an industrial real estate investment. He said, come on over. Let's have lunch. And we went to lunch and I showed him my prospectus. I'm looking around my office to see if I have one that I could show you. It's usually like a 60-page printed document. I still print them these days because I bring them with me to meetings, which
Yeah.
is a lot easier than having someone look at it on their computer.
Yeah.
And I asked him, I said, how would you like to invest in this? He said, I'm fine. I'll put in 20. How much are you putting in? That was the big question because
Yeah.
after that, everyone wanted to know how much do you believe in this deal? Are you putting your money in as well?
Skin in
So
the
I said,
game.
yeah. So I said, well, I'll put 20,000 in. And when you're a broker, sometimes you spend all your money instead of saving it. So I didn't have that much in the bank.
Right.
And I said, it's a stretch for me to put 20 grand in. I don't just have money lying around. This was the 1980s. And I scrounged it together and I put 20,000 in to be at the same level as the investors.
Okay.
And that's really what happened is I went from one phone call to a lunch to a dinner to a breakfast, and I showed people what I was doing. And I'm doing the same thing actually to this day. Right now, I'm buying with a group. I haven't put the group together. It's just starting. We went under contract yesterday to buy a $14 million complex of 3 buildings on the Chicago River that's already leased for 7 years to a company that makes fruit juice.
Okay.
And I'm raising the 14 million, and I'm concerned because I've never raised 14 million. The most I've ever raised for any deal was 9 million. So I sent out an email today to a group of people that I believe might be interested.
Mhm.
And I said, I'm just getting started on this. We went under contract yesterday. I'm looking for investors, 50,000 minimum. I'm raising 14 million. I'd like to have your help. Will you help me by introducing me to people you think would be good for this investment? And will you go in yourself?
Okay.
It's a great deal because we're getting the 7-year lease with a 7% cash on cash return, no mortgage, all cash. And I believe that when we sell this thing in 7 years, it's going to be a residential redevelopment and they'll probably double their money on the sale.
Oh, okay. Yeah. What a great place for condos along the river like that.
Yeah. But I have to
Yeah.
be able to tell my story.
Yeah.
The key is you got to be a storyteller. You got to tell the story. Here's what happened. Here's how I found the deal. These are who the owners are today. This is who the tenant is. This is who the neighbors are and what I think they're going to do. There's some residential across the street that's beautiful. The units are $1 million each. And I think one day this industrial complex is going to be a beautiful condo or townhome development on the river. People like a water feature.
Yeah.
And when
No.
I sell it that way, the investors who I've talked to so far have said, wow, that sounds great. I'm in.
Yeah, and another thing that you're doing, your first one was a $20,000 offering. This is a $50,000 offering. You're not going for big chunks. You're not saying, hey, I need, 200,000, 250,000, half a million. As when you're starting out, you want to go with those smaller chunks.
Well, I
You
go with
start
smaller
big.
chunks. I go with smaller chunks as the minimum.
Right.
But for example, my friend Nate, if he went in, he'd do a half a million or a million. And
Sure.
I've got a bunch of lawyers and doctors, and they'll go in for 50. If I tell them the minimum is 100, they'll go in for 100,000.
Yeah.
There's some people 250 is too big of a number. If you're in the top 1% of the wealthiest people, your net worth is 11 million or greater. And
Right.
I would say of my 200 investors, less than 25% are at 11 million or greater.
Okay.
The vast majority of my investors are wealthy people, but they're probably between 2 million of net worth up to maybe 8 or 10 million.
Yeah. Well, I think it's great that you give them the range. You've got the minimum, then they can go above that. How long did it take you on your first deal, Joel, to raise your money?
A week.
Good Lord, really?
Yeah. Well, the Podolskis put up a third of the money.
Okay. Yeah.
So yeah. So I only had to, and I put up 20,000.
Okay.
So, so I
Of
raised
course.
560,000 and the Podolskis put in about 170, 180, I
Okay.
put in 20. So we had 200 to begin with.
Okay.
So I only needed 370 more. And so I didn't need that many people at 20,000 each. And I actually brought in one of the contractors, the bricklayer, Lenny. And
Yeah.
Lenny was doing some work to the building. And so he put in 30,000 for a brick job that he was doing at the property.
I'll be damned. Yeah, you never know where you're going to find her, right?
Yeah.
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 Yeah. Well, I can't imagine it takes you too long to raise money now. I'm sure it's an email and a few phone calls and you've got it. But,
No,
it's,
no, it's not that easy.
oh, no.
It
Okay.
is that easy for some people, but it's not
Right.
that easy for me. For
Right.
me, actually, I have to have a conversation with each investor personally. That's just the way I do it.
Right.
And people don't just send the money. I call them and I want to talk to them about the deal and I want to make sure it's right for them.
So, Joel, if you were starting over, you're a new investor
Mhm.
and you wanted to get in touch with wealthy families, what's the process? What would the process be now?
So the best way to meet somebody is through a referral,
Right.
a friend referring a friend.
Right.
And the way that I've done it is probably different than anybody else. I started as a broker and I built a big group of contacts through my brokerage. And those became the people that I was friendly with in business and became personally friendly with, and who became the investors. Everybody has a network of
Yeah.
some kind. It begins with one person. It doesn't have to be 100 people. It begins with one, and that one knows somebody, and then the next one knows somebody. It's almost like multi-level marketing.
Yeah.
You and I love multi-level marketing. We buy products that we've been buying for years, from when my son was a multi-level marketer, called Melaleuca and another one called Usana. And that is a model that, if you study those companies, it's people meeting people through other people.
Yeah.
And that's the way to do it. It's to tell someone who trusts you what you're doing and explain the deal competently and ask them if they have anybody else that could possibly be interested.
I think it's key. First of all, I want to touch on LinkedIn, and I'll come back to that. But it's key that you have skin in the game, because I think a lot of people these days, they put very little in, and it's hard to do as an investor to look at that and go, oh, they don't really have that much in. But now it's a lot easier now to build a network than it was when you were starting, because you
Yeah.
didn't have a computer. Now we've got LinkedIn, where you can go on, if you want to get in touch with somebody, you can go on LinkedIn and see if you have a connection that's connected to them, and then ask for a referral. And so,
Yeah, it's an amazing world that we're in.
yeah,
So different from 1981 when I started.
yeah,
But it's also a problem,
well,
because that means anyone can do it. So
mhm,
when I first started doing my syndications, there were very few syndicators.
right.
And now, not only is everyone a syndicator, but everyone's teaching other people how to be syndicators. And
I see those guys on YouTube. They've never done one, but they know all about it.
right, right. They're making their money on the courses, which is
Yeah,
fine.
sure.
And if they're really good, it's valuable. But not everyone's going to succeed. I would say, of the people who start out believing that they're going to be a rich real estate mogul, I would say that probably 1 to 2% actually follow through and do what it takes.
Yeah. Yeah, you see that a lot. And I think that's kind of anything though, Joel. It's you can teach. I do a lot of mentoring, and I was actually spent an hour on the phone with this guy this morning, and he's getting frustrated, and he's just trying to go for the fence, swing for the fences, and I keep trying to get him to do the basics. And so, you got to start doing the basics. You got to start doing the fundamentals, and and that goes not with just doing brokerage, but doing this investing. You've got to start where you can afford to have skin in the game, a nice sized project that you can build from, and then go from there. You're not going to come in and do that $14 million oceanfront or lakefront property, riverfront property.
Yeah.
Number one.
No, no, but a lot of my friends are in multifamily and they've been doing funds for a long
Yeah.
time and they've got a great track record. One of the things people have to watch out for is the market's been great, and I mean uninterrupted great, as you
Yeah.
know, for multifamily and industrial for 12 years.
Yeah.
There has not been a downturn. You know, that guy's got the sign behind him that says the stock market always goes up.
Yeah.
Uh,
Yeah.
it's a joke. He's kidding. Of course it
Yeah.
doesn't. And the real estate market doesn't always go up. And so one of the big things that I talk to people about is preservation of capital being extremely important, because in 2008 we were in deep trouble. I think you know this. I went into a depression and I barely came out of it alive.
That's the
Because
story of a lot of people.
yeah, it destroyed so many people's portfolios. And in my case, I was lucky. We had low leverage and we were able to save the day. But I had forbearance agreements with banks and I had people
Yeah.
who were ready to kill me. And today, the most important thing to my wealthy investors is not how much they can make. It's making sure that they don't lose money.
Capital preservation is
Yeah.
or wealth preservation is, when you get to a certain level, you're more focused on that because you don't need that much more money, but you don't want to lose what you've worked so hard to get.
And an ordinary rich person who, you're wealthy if you have a $5 million net worth. You're wealthy if you have a $3 million net worth. And that's nothing to sneeze at. But someone who's 75 years old and has been a doctor and has a $3 million net worth is worried about when they retire, how are they going to have enough money if they live to be 100, which in today's world is not crazy. My friend Nate's
Right.
96. He'll make 100. I'm sure of it. Well,
Yeah.
I'm sure of it, but I believe he will. And if someone has $3 million and they're 75 years old, where are they going to get the income and how are they going to preserve that so they don't run out of money and end up on Medicaid?
Yeah. Yeah, exactly. Yeah,
Yeah.
we've got one investor, Dr. Gaines, actually. He's 98. He still invests. Now he's doing it mostly for his family and fun. It gets him out of the house, and his wife pushes him out of the house. She's like, just get him out of here. And so go look at properties with him on a Saturday. And it's a lot of fun. You kind of think at his age he's going to be quiet. He doesn't stop talking all the way you're out with him, and he's brilliant. And he reads. He sits and reads all day. But it keeps them active too at that age. They get out there, it keeps their brain working, and they're building for their family as well.
Yeah. I think that I can't overstate how much we focus on safety in our deals.
Yeah.
And that's, you have to have a brand. I've heard you talk about this.
Yeah.
You have to have a brand, and our brand is laser focus on industrial in Chicago, which is a giant market. It's a billion and a half square feet with 20,000 companies. So it's laser focus in one place. It's industrial only. And it's with the strategy of safe investing so we don't lose money. And we do our deals all cash with no mortgages. People think I'm an idiot. You know that I've said that before.
Yeah, I heard it.
At least 2/3 of the people that I know in real estate think that I'm a moron because I only do all cash deals now.
Right. Yeah.
But they're not going to invest with me if they think that that's a bad strategy. If they want to take more risk, I'm happy that they do, and I'm glad that they can. They just can't do it with me.
Right. Yeah.
So
yeah.
that's
Walk us through that. So you pay cash for everything. And
Yeah.
when did you start doing that?
2019.
29. Oh, okay. 2019.
Yeah. 2019.
And what made you say, I don't want any risk. I'm going to pay cash. Is that what happened?
Yeah, the
Little risk.
market was too good for too long, and even though it's still been great for 4 years since 2019, we're in a super bubble of some kind in this economy. I just know it. And I know that in 2008, when I couldn't sleep at night and woke up sweaty and anxious and said to my wife, I don't know how I'm going to get through this period of time. I never want to go through that again.
That's tough.
And I know there's enough people who are in my camp on that feel the same way. And I say, you belong with us if you want to take very little risk. And if there's no bank, there's very little risk. No one's going to take it away because banks own you. You are the slave to the bank. And I'm not saying people shouldn't do deals with debt. Debt is very important in real estate, but not for me.
Yeah, I get it. I do think, I'm sure a lot of our subscribers, which by the way, if you guys are watching this and you have questions for Joel, put it in the comments. I'll make sure he sees them and gets back to you. But I'm sure they're saying, why doesn't he raise a fund? Why? What do you? What's the thought process? Yeah, got you blind fund where you just cut a check every time.
Well, I have two reasons. Number one is my investors who are really sophisticated know that a lot of people who have funds have a problem where there's a hole in their pocket, so to speak, and they need to go spend that money because they don't make the fees and they don't make their promotes if they're not always buying.
Yeah.
And my situation has changed. I don't want to be under pressure to go do deals just because I have the money.
Mm-hmm.
So I also have an 8-person advisory board, and each deal gets vetted by my 8 smart investors who ask a lot of good questions. And then I can go to everybody else and tell them what the deal is. And on a deal by deal basis, each deal's different. Sometimes we want to structure them differently than what the fund would have been.
Right.
And sometimes we find a deal where my little inside group of 10 people or 12 people find a deal and we flip it internally, just the 12 of us.
Okay.
And if you put a fund together, every deal you do, you can't cherry pick. Every deal has to be in the fund. And if we find one of those deals where we can turn a $2 million acquisition into a $3 million sale in 60 days, we just do it ourselves.
Yeah, can imagine.
Yeah, once you have a fund, when you find that amazing deal,
yeah, you're holding on.
You got 250 people who get their little 1% or whatever it is of the $1 million profit. So there's a bunch of reasons not to do it. There are a bunch of reasons to do it. And I have done funds, and at the moment, we're deal by deal. It's better for us.
Well, to have to buy something right now, I mean, I see what our investors are going through on the broker. You know, we're out there brokering deals, and it's hard to put a deal together right now. And if you have to spend that money, I wouldn't want to be in that position. You know, so it can be great to do. But now, are you guys finding assets out there right now? I know you got the $14 million deal on the river. You guys have several deals you're looking at right now? Or is it a little slower? Oh, you do? Okay.
Yeah, we do. We've got 2 other buildings that we're looking at that are also relatively small. The deal on the river is 3 buildings, 21,000 feet, 22,000 feet, and 42,000 feet on 5 acres total. Those are our favorite sizes. That's called B and C infill small industrial.
Right.
It's another strategy that we have, which is let's not go buy the big monsters, because then we're competing with pension funds who have unlimited money. These Amazon and Target warehouse and all those giant buildings. We don't do any of that. We do smaller buildings that cannot be reproduced in any reasonable market at any fair kind of price. Yeah. So there's a totally limited supply of those buildings, and we work hard to find them. We cold call door to door still to find deals.
Never stops, does it? You always got to be out there looking for deals.
Yeah, we'll never be the biggest guy in town. Yeah, but we have great relationships. Next week, I'm having a barbecue with one of my newer investors with his girlfriend and my wife. We're going to his house. This is what life's about. It's not about how much can I accumulate. It's how many great relationships can I have that matter.
Yeah, I couldn't agree more. Actually, that's a great place to end, Joel, because you can't beat that statement. It was perfect. Well, Joel, thank you for coming on today. I know we went a little longer than we planned on, but I think it was such good advice. And like I said, folks, if you have any questions, put it in the comments and we'll get back to you. And Joel, thank you. Thank you very much for taking the time today.
It's great to see you, Joe. Thank you.
Thank you very much. And for those of you watching, make sure you give us a like. And if you haven't done so, make sure you subscribe.